How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on the British pound US dollar. But before we hit the chart, just go visit my website. You'll find the link in the description where you can find some previous trading material that you can read. For those of you that's getting started into trading, there's some nice video categories for you to get started, and it will tell you everything about trading and how to attack the market. And then also for those of you that's a little bit more advanced, there's some nice strategies that you can follow. And then also resource tab. There's some nice resources that you can download. COD report is one of them, which is updated. You can download that for free. Then also visit my preferred brokers tab. These guys are absolutely brilliant when it comes to having a reliable broker behind your side that you know that you are safe when trading. Okay, so let us hit the charts. So we're going to be doing only analysis on the British pound US dollar. Don't have a lot of time today. But I'm only going to do it on the 1 hour and the 15 minutes. I want to show you a couple of things that happened this week and how confirmation is so key when placing your trades in the market. So if we look at the 1 hour time frame, okay, this is where we ended off last week. Basically, for those of you that didn't watch my previous analysis, link is also in the description. So we ended off with price just going in a downtrend over here. Then what we saw is we saw this little, I'm just going to highlight this high that was broken, okay, leading up to, when was this? End of last week. So we had a nice break of that previous high, not the low, the high, and then price just turned and not taking out this low. So basically I was waiting to see if this price is going to carry on downwards, you know, attacking this low over here. Or is price going to start? I'm just zooming out a little bit. Like I've said before, I'm just highlighting all these little highs and lows in the market. So just looking at the good highs and lows, if I can say that. The strong, there we go. The right word for it is strong. So I'm just highlighting all these strong highs. Okay. So these are all areas of liquidity that's lying above that. And what we know about price action is price action hunts those liquidity areas. So for me, it was key just to see what price is going to be doing. Is it going to carry on downwards, or is it going to start taking out these highs that's lying above here? So, and as we can see, last week price ended off, or the week ended off, taking out a previous high, then coming down, not going into that low, but just kind of just ending the week like it always does. Just in a consolidation area. So basically we were waiting to see what price is going to be doing. Okay, so starting off this week, we can see price just moving, and then, you know, just waiting for it to make its move. So this is where you just sit on your hands and you just wait. And as we can see, there's a big bullish movement in the market. Okay, so whenever that happens, you have that push in the market. And then you think, okay, and then you start reacting. Okay, it's not predicting the market. I always say react to what the market gives you. So we have got this high. We see that there's a big bullish movement. We see that price is not attacking this low. So now, because of this bullish movement upwards, now we're thinking, okay, this is now buy opportunities happening. Okay, the market is shifting towards an upwards movement. Just on the 1 hour time frame, guys. I'm not talking about the monthly or the daily or whatever movement it is. Okay, I'm talking about what the market gives you on a specific time frame. I'm looking at the hour time frame, day trader, hour time frame. You can go back 4 hours if you want to. 1 hour time frame. I'm looking at the hour time frame here, and I'm going to enter using also the 15 minutes, 5 minutes. You know, those are the entry areas in the market. But I'm just going to look at the 1 hour and 50 minutes now, because like I said, I just want to show you something. So we have got this movement upwards. Okay, so now we're waiting for market to make a shift turn, because now we have got a low, a swing low over here, and now we're waiting for market to make a movement downwards so we can have a swing high. So there it is. Okay, so this is a 1 hour time frame, guys, like I said. So you take out your Fibonacci, you've got a swing low, and you've got a swing high. Do you see that? Okay, it is not rocket science. You've got a swing low, swing high. Market went into a bullish movement quickly, took out this high was taken out. So we're expecting market to retrace back to the 62% area. That's the area that we're looking at market to retrace to. And once market gets here, once price gets here, we want it to take a buy opportunity because we can see this movement upwards, buy opportunity, and then price will obviously be hunting, or most probably be hunting that highs over there. So we have got this area in the market. Okay, now this is where you can get a little bit venturous if you want to, if I can say that. So 1 hour time frame, price gone up, swing low, swing high, retracing back. So you are targeting this area, correct? That's the area that you are targeting. Excuse me. If you go to the 15 minutes time frame, let's just move to the 15 minutes time frame. I want to show you something interesting. So on the 15 minutes time frame, just zooming in a little bit. So this is the area that we're targeting, correct? Okay. For the Fibonacci, I'm just leaving my Fibonacci on the 1 hour, highlighting this area so that the chart doesn't get too cluttered. Okay. So we have got this area. We want price to retrace back to this area, and then we're looking for buy opportunities. So where is another area, or where's some more confirmation of price returning to a certain area in the market? We look at some fair value gaps. So if you look up here, all these gaps are basically closed, except for, just zooming in a little bit, right there. Okay, there. The reason I'm saying that is, you see that it's a break. It leaves a gap in the markets. So I'm highlighting this area. Okay, that is the area that I'm highlighting as a fair value gap. So now I've got two confirmations. Well, not two confirmations, I've got two, yeah, let's call it confirmation. So I've got two areas in the market that I want price to retrace to. Price needs to retrace back to this 62% area, which is this big highlighted blue area on the 1 hour time frame. On the 15 minutes, I've got a fair value gap that was created, and I want price to take this out. Do you understand? So once price takes that out, hits that area, that's my buy opportunity. So let's go to the 1 hour time frame again. So I've got two areas in the market, as you can see, that I'm highlighting. So price is most probably gonna go past this 79%, just taking out that gap in the market there. That's all. That's basically what's basically gonna happen. So I'm looking at that and I'm thinking, okay, that's probably gonna be what's happening. Now, being venturous, okay, is you know price is gonna go down. So now, why can't I trade it down? Okay, so you have a, and this is where you need to just see these things. So you have a, let me just do this. I'm taking this out. So you have a swing high. Now we want price to go there. Price turns before that, it retraces back. Okay, we do that because we have a swing high, swing low. I don't want to confuse you guys. Okay, price goes and hits that 62% area right there. Where do we want price to go to? We want price to go to, I'm just making that because that's the area. We want price to go down to that area. So let's trade it down. What's happening? What happens? Price goes down, hits that area. It takes out that fair value gap, as we can see. So this is now our buy opportunity. So now we sold down. We caught, what is that? 70 pips. Because we expect price to go down to that area because we're waiting for a buy opportunity. Do you understand that? So it's not always necessarily that you need to sit on your hands and wait for that buy opportunity to arise when market goes a little bit bullish or bearish, vice versa. Okay, you can still trade up and down, but just be careful with that. Okay, I need you to practice rather just, you know, for those of you that's a little bit more into this and understand how price movement works and price action works, yes, you can do that. So now price hits that area, takes it out. That's our 62% area. Now we're waiting for that buy to happen. So what happens is, there we go. That's it. You hit the market, price starts moving up. Okay, easy. It's not rocket science, guys. Okay, so that's the area. I'm just going to actually take this out, because this was our entry on the 15 minutes. Okay, there we go. So that's our entry in the 15 minutes. So you enter your buy over here. What's your target areas? My target areas are going to be these highs. As soon as I see price moving up, okay, now that's going to be my target areas in the market, because I want price to take out those highs, the liquidity that's lying up here. Now, missing that opportunity in the market is not a train smash. Okay, you can see price going up, making a low, going up again, making another low. Price breaking this area with a nice bullish movement, a bull candle in the market. Okay, hence creating another fair value gap, which I will show you just now. But now, this is going to be my new low right over here. The reason I'm saying that is because price went up, it kind of like hit, it didn't break that area, then it went down, created a little bearish candle in the market, then price pushed up, taking that, just breaking that little structure and start moving up, taking out this high, and then pushing up. So that is going to be my new low over there. So now I'm waiting. This is now for those of you that missed this opportunity. We're waiting for another opportunity in the market. We're waiting for another swing in the market. And there it is. Okay, you can see that. So basically, we want that swing low to that swing high. That's our swing low that I just pointed out. That's our swing high. That's how price went. Took out that high over there. Then we wait until price retraces back to the 62% area. That's the area we're waiting for. Okay, going down to the 15 minutes time frame. So what confirmation can we look at? Confirmation is, just zooming in, there we go. So confirmation is going to be this fair value gap. Okay, the reason I'm saying that is, look at that. I want that gap to be filled. Filled meaning price is going past it. Okay, I want price to go past that area. Once it goes past it, this is our 62% area in the market that we're looking for. And this is a nice entry because we want price to pass or just fill that fair value gap. That's the gap between these two candles because of that break of structure. Okay, you all see that. And I want price to hit that 62% area, and then I'm looking for buy opportunities. 15 minutes, price fills that fair value gap, hits that 62% area, and then starts moving up. Going to the 1 hour time frame, we can see that. Zooming out. So that's our second opportunity in the market, right there. So that's two opportunities. Okay, for those of you that missed the first one, okay, that was the first one. Excuse me, there we go. That's our first opportunity, second opportunity in the market this week for only one pair. So if you missed the first one, you could have bounced onto the second one. If you took the first one, you could have added another one in the market. Okay, that's just more confirmation of prices carrying on upwards because this is our targets in the market. That is where price is going to be taking out those highs. And as we can see that is what happens. Price just slamming those highs. It's going for that liquidity in the market. Okay, and once it did that, there's highs over here, price started turning down. Okay, it didn't take out that high and it started moving downwards. But I mean, guys, for those of you that took the first buy opportunity, that is, what is that? Almost 200 pips. That's 185 pips. For those of you that took the second one, okay, missed the first opportunity, that's 130 pips. Okay, for those of you that took both, it's 180, 130 added together. Understand? So that's the pips that you can grab. And that's only on one currency pair, guys. And that is flipping between only the 1 hour and the 15 minutes. You can even go to the 5 minutes to get better entries. So it's as simple as that. There's nothing difficult about trading. You need to simplify it as much as possible. Okay, stop looking at a lot of videos, a lot of strategies, this and that and this and that. I'm using two methods. I'm using the fair value gap. I'm using the Fibonacci. I make videos every week about this, and I show you how price moves up and down the market. And like I said, you could have, for those of you that caught this little sell downwards, could have added to that. Okay, so that is over 300 pips that you could have made on one currency pair this week. So please, guys, take a currency pair, take two currency pairs. Okay, study them, trade them, backtest them, get to know it, get to know its movements. Okay, use the British pound US dollar and the euro USD, because these two, move together. That is why I always do analysis on both of them. I'm not doing one for euro USD today. Like I said, I just wanted to hone into this one, so I didn't want to make the video too long. And basically, that is what it is. Okay, so we ended off this week, obviously. Let me just take out all of this. Whoops. Let me just zoom out a little bit. Just don't want to have it too cluttered. Okay, these highs have been taken out. We still have that high in the market over here. And then what I want to do is I just want to see what price does here. Will it carry on upwards? Okay, I'm just highlighting that area. Or is price now, or has price basically, so not is, has price gone and taken out a lot more liquidity that it needs to, a lot of liquidity. Now price is going to start moving downwards. You need to look at the higher time frames, to look at the bigger picture and see what price is doing. So guys, that's all from my side. I hope you enjoyed this little analysis on this currency pair for this week. If you did, don't forget to hit that like button, subscribe button, notification bell, and I will be seeing you on the next video. So guys, I hope you stay safe and happy trading.